Sunil Subramaniam joins in on the show right now. Sunil, hi, good afternoon. Welcome to ET Now. Just wanted to understand, where is it that you are seeing pockets of overvalue and undervalue in the market, if at all?
It's very hard to say, in terms of pockets. It's actually, I'm seeing that there's a lot of differentiation within sectors among companies. So I would say that it's largely the infra play. I would say that if you look at it from a classical earnings P ratio, is definitely looking rich in valuations, because a lot of the price is from the order book and from the future growth, right? So that's one sector where I see. The other sector where I feel some value is creeping in is cement, because cement, I think, had went through a pretty bad phase earlier, and there was a lot of negativity. And now I think the price correction and all what has happened there, now we are seeing value in cement actually, because we've always been bullish there, but I think there's some news of capacities and everything had led to a kind of a market feel that the earnings won't support. But that's, I think, we feel that now that's a bit undervalued. Within the BFSI pack, again, if you see PSU are still continuing to show in a discount, but I wouldn't call that undervaluation. I would say that there's always going to be a discount for the PSU versus the private sector banks. But I would say relatively the run up there means that their valuations are fairly okay now. They are not either undervalued or overvalued. Metals is a global cyclical. I would say that depending on the news abroad, right, the future earnings, because in metals, the pricing of London Metal Exchange, right, comes into play in terms of future earnings prediction, how that is. And there, if you look at the fact that a world slowdown is going to be coming sometime or the other, we feel that the projected earnings there could be under pressure. And so hence some sense that it is overvalued a bit.
What role do you think in terms of the policy action we are likely to hear from Fed now? Because that in a sense will be the decider for the second half. The fear of recession is now history. And from recession, we are now talking about growth coming back.
Absolutely. And I think the Fed's talk also reveals that, because see, inflation is still not at their comfort levels of 2%. And the only reason for them to ease off on a rate hike to control inflation would be if growth was slowing down, and hence the balance between the trade-off between growth and inflation coming into play. However, with the growth numbers coming strong, Nikunj, the Fed is likely to stamp down even more in terms of doing rate hikes, because in the coming year, it's an election year, right? And I think the inflation has a far greater importance in politicians' minds than does growth. And hence the gentle nudge from the president and his cohorts would be towards making sure you bring inflation down in an election year. So I think that to that extent, I would say I would expect the Fed to continue tough speak, say the right things about we will do everything in our power to bring down inflation. How much that translates into actual rate hikes? Lots of time Fed we've seen right from the good old days of Greenspan and Bernstein that they try to talk down stuff rather than act on stuff. So I expect a lot of hawkish tone to continue on the Feds. Will translate into at least one rate hike, but whether that translates to 2 or 3, I think we'll have to wait and see how the data actually pans out.
Sunil, you've really taken the clock back, my friend. Alan Greenspan, I think there was a Janet Yellen in between, and there was Mr. Bernanke. You've taken the phrase back to Paul Volcker 1980s. You've been tracking Fed from 1980s.
Absolutely.
I've only read in textbooks. I mean, the Paul Volcker Reagan era, what was supposed to be like this really good era where they went hard on inflation. But meanwhile, Naresh, 19,400 on the Nifty is gone. Is there a significance of that? Are we in for some kind of a trend fall now?
So we are right at the same place where we started off in the morning. So the view is same, 19,300, 19,250. Only when it breaks, you change the view. Hold on to the positions bought at 19,400. You have a 100-pointer stop loss. You almost got a target at 19,600, which was the first one. It's above 19,600, you become bullish. Above in a major way, and below 19,250, you become bearish. So for now, we are in the range. Stick on to the range. View remains the same.
Okay, Kunal, we were talking about consumer tech stocks in the morning, and yesterday what looked like a good Wednesday for Paytm, it's turning out to be a volatile Thursday. Where is Paytm headed? I mean, we've not spoken about it in a while. I think it was on your call in the morning, right? Okay, where is that stock headed?
Yeah, it's still flattish today, but then the long-term charts are very, very attractive for Paytm. And by long-term, I mean at least over the last 7-8 months, we've seen a decisive change of trend for Paytm. I think 2022 end, the stock made a low which was 545 odd mark. And from there, it's managed to move up exceedingly well, gradual manner of uptrend, not a spiky move which which is coming to the stock price. There was a very sharp up move in the month of June for Paytm when it moved from I think 720 to 900. But then post that the stock went into a 1.5 or 2 months of consolidation. Yesterday was the first sign that the stock is coming out of this 1.5 or 2 month of consolidation. Good volumes which you seen yesterday. Even though today the stock has ebbed off from intraday highs of 930, but I would still believe that with volumes making a strong comeback over the last 2 days, yesterday and today as well, this could be a decisive move for Paytm coming out of consolidation. So bullish on the stock and expecting the stock to come back to that 4-digit mark pretty quickly.
Okay, that's the take coming in on Paytm. Let's see what Reliance is up to because, anticipation and expectation is running high ahead of its AGM come next week on the 28th. The stock has slumped almost about 2% right now, 24.77 on this one. But let's quickly take it across to Sharad, find out what the dealing room chatter is and what stocks are propping up there. Sharad?
Well, yes, in focus, we're having Rallis India, and what we are hearing from the dealers is there is certain buying coming from the counters in the HNI segment. Apart from this, also looking at the volumes, it's coming at almost 7 times its 20-day average, and the stock has risen its highest levels seen in over the last 7 months. Now, of course, the street buzz is that the weaker monsoon is there, and because of that, this might actually spur the demand for crop protection, and this is why the stock might be rallying. Apart from this, also the company, if you look at it, Ace investor Rekha Rakesh Junjunwala has also almost 7.75% stake in the company, and recently the company came out with its Q1 numbers which were largely above estimates because of increase in the margins, but there was a muted outlook coming, especially for the international business, and they've stated that the pricing pressure that is likely to persist for the export business, and also the turnaround or the increase in volumes is expected from the second half of FY24. But for the domestic business itself, what our channel checks are suggesting is a higher channel inventory that is expected to come off because of the conditions currently.
We've got a bit of a mumbo jumbo happening in terms of the Nifty. Okay, there you can actually draw a line which just tells you that the selling only has intensified. Sunil, markets will not go up in a straight line, not will they go down in a straight line, but there are a lot of stocks which have only gone up. Defense, railways, space stocks, I mean space, that entire cohort. If markets have to correct, where do you think the decline would come from? And where do you think you would like to buy that decline in terms of finding value?
So I would say that the decline would come from international related sectors, number one, because that's where the news is very confusing, whether it's a hard slowdown or a soft recession, the rate hikes. Anything international related. So IT, pharma, metals, global cyclicals, energy, all of these would be the ones where you would see rapid rises and falls. So I would say that if something has gone up very rapidly recently, that's where, because they are news flow related to a lot and less fundamental related in terms of what actual quarter-on-quarter numbers are coming in, right? So I would expect there to see an extreme of volatility. The other place where one has to be a bit wary is that we've seen this, I think I referred to in the answer to the previous question also, that in the infra-related pack, we've seen the whole story of government-driven infra, the PLI, the greenfield capex happening because capacity is rising. And we've seen a whole lot of across the board rises happening there because of anticipation that this will, and these are extremely cyclical sectors. So in the times when they were bad, they fell very sharply, and market is now reading into a very rosy future, right? And where is that seen? It's seen in expected order books, which will translate into order books and then into EPSs in the future. And these are typically high operationally leveraged. So high interest, high depreciation costs, which are fixed costs. So you will see a lot of, so there you will find there may be quite a few surprises where market overran itself. And the other way surprises where the market didn't anticipate the kind of V-shaped recovery that would happen in their EPS. So I think that whole infra-related pack here, I think would be susceptible to these kind of high volatility, sharp ups and sharp downs is what I would. So hence to remain wary about taking shorter term play exposures in these kind of spaces and take only something like if you're committed like over 3 to 5 years, you will ride this volatility, then you hang on to that space.
Now, what do we have? Bit of a linear decline. Metals are down, steel is down, commodity consumers are down, pharma is down, auto is down. Naresh, the auto space has been rusty. I mean, till about Jan. Sunil, why are you laughing?
Because you said linear down and the things
Intraday trader, Sunil, intraday trader. You're talking about intraday.
From a long-term buyer, growth buyer to intraday move and connected the two. So that's why I got a smile on my face.
You know, I have to do my job of addressing both the constituencies. Please appreciate that, Sunil. You don't take it seriously. Okay. Enough of workplay. By the way, Sunil, thank you for the speech. We all really, enjoyed it. Thank you very much.
Thank you.
Okay, Kunal. Linear decline if you're an intraday trader.
Yeah, it's a decline for the index, but again, I think we've not yet confirmed a breakdown below the 94 mark closing base. Hopefully, we'll wait for another 10 minutes. If we manage to do it,
market will shut in 10 minutes.
Yeah, that's what.
9 minutes will shut. What will you wait for?
But then, if we recover another 20 points, then we are back about 9400 mark. Then we are back into that yo-yo kind of a market. One of the trends which I am picking up on the index is the 50-day moving average. And over the last 12 months, there have been 3 times when the index has started to trend significantly below and above the 50-day moving average. We are at a touch and go movement towards the 50 DMA. 19364, I think, is the 50 DMA for the Nifty. We made a low of 19369. So that's the important trigger which I would believe in terms of level, next level to be watched out for.
But would you go home with a short position?
Yes.
On the Nifty?
Yes. I'm carrying the shorts.
Naresh, would you carry your short positions if you have any?
There would be the long position initiated at 19,350, 400, keep a stop loss below 19,300. And that's the view. Let it clean out the exact price points where it was making a bottom and a top. Till that point of time, you stick to the position, stick to the discipline.
Sunil, now the obvious question, which is that if I look at autos have done rather well this year, starting from an Ashok Leyland to an Escorts. But if I look at the auto sales, passenger cars are growing in 4 to 6%. Keep SUV aside. Two-wheelers are just not growing. Tractors are growing. And with the exception of Eicher, nothing has reported double-digit growth. What is this excitement in auto all about?
Excitement auto is on the margin rather than on the top line. All the numbers that you mentioned are top line related in terms of sales. So I think what auto has been through is an extreme lot of pain on the margin front from those input costs impacts, from the fact that sales were below break even during the COVID periods, right? And hence there was severe impact on their earnings. What you're seeing is a normalization breakout, right? As things are getting normal and commodity prices are easing and their input costs are easing and some prices increases have happened. So what you talked about is in numbers is the quantity aspect, but there's a price into quantity even on the top line. So I think price increases have happened and there are cyclical pockets like you mentioned about tractors along with that HCVs, LCVs, right? With an expectation of the recovery in the capex cycle, right? Logistics and this will see a big boost. So what you're trying now seeing is that the auto pack, right? It's not merely to look at the sales quantities, but if you overall, I see that it's quite a sweet spot. The only negative, if I would say apprehension there is in the auto component space, which is largely export driven. And if internationally there's a slowdown, and clearly you can expect an export slowdown. So leave that pocket aside. And of course, tractors are monsoon related. So to that extent, there will be variability there. But otherwise, on the commercial vehicle side, I'm pretty bullish in terms of the expectation for pickup. Election year coming. So again, huge number of SUVs and Jeeps and all of that will be in heavy demand. So you'll see good spike up in those numbers there. And let's also bear in mind that despite the rate hikes,
Sunil, modern
EMIs
times
having gone up haven't affected that demand that much.
Sunil, modern times, most of the campaigning is done on WhatsApp and digital these days. Forget Jeeps and tractors and autos. Modern times.
You haven't seen Gadar, it looks like. The screens are
I haven't
back.
seen actually.
Real Bharat and real India is not WhatsApp so much. There's real ground level development. Please go see Gadar.
No, actually, I haven't seen that. Aisha, have you?
No.
Kunal?
But I did attempt watching Gadar 1, thanks to Kunal's recommendation.
I saw one and I haven't seen
tried. And then
I
half
saw
an hour
one.
into the movie, I stopped.
I saw first and after I decided not to watch 2. That's me
No,
for
no,
you.
but you
but-
can't
The minute the
understand
hand
real
pump
India.
scene came, I was like, that's it.
You can't understand real India until you see Gadar and see why it's such a big craze and a hit. Because that's the emotion of the real Indian coming. Not all of us sitting here, digital, WhatsApps, all these. We are all poncho veggies. But the real India guy there, he's the one who's going to vote in the election, and his thought process comes through in this.
By the way,
just
Sunil,
go
the
see
biggest.
for that.
Sunil, really on a lighter note, the biggest hit this year globally is Super Mario. I don't know what to make out of that as a trend. Nuresh, you are very quiet.
So I haven't got a time to watch a movie. Could only manage to go for Oppenheimer.
क्या कर रहे हो यार नरेश? इतना 3:30 बजे मार्केट तो बंद हो जाता है.
So
You were
I
off
have twin boys to
yesterday. You had
take
full
care
day
of.
yesterday. You
So I have twin
you
boys
were
to
off
take care of.
yesterday. You had a full day.
Tough times.
Kunal, did you manage Gadar too?
No, not yet.
No?
No.
Die-hard fan you hasn't.
All right, 3 minutes to go. What do we have? The market is set to close at the lowest point of the day, almost at the lowest point of the day. Don't read too much into it. I think you need to see perhaps more shakeout to realize trend has reversed. And these are just give and take which are currently happening in the market. So Naresh, next 2 days are important because you'll hear from the Fed. So what should one do if somebody is a positional trader?
So the sizing should be a little lower if you're an index trader. Stock specific, continue to hold on the positions. You'll come to know on Monday whether you get stopped out or the trend continues.
Right, okay. Let's get in some BTST trades as well going as we are just counting down minutes into close. Kunal, what's on your list?
So I'll go with a mix of one buy and one sell. The first one is about TVS Motors. Looks attractive for a target of 1430, stop loss at 1350. And India Cement has actually given a breakdown on the charts short term. So would suggest a sell, targets of 229, stop loss 240.
Right. Naresh, what about your BTST ideas?
So first would be a buy on IndusInd Bank close to a 52-week high, stop loss at 1410, target price of 1450. Second is a buy on Indian Hotels near a 52-week highs again, stop loss at 397, target price of 415.